There is only one way to buy a property using your superannuation. It is buying it in SMSF, Self-Managed Super Fund. And this is getting more popular among many Aussies, especially for those who are bullish about Australian property market. However, although there are many advantages of setting up an SMSF, it is not for everyone. If you want to find out more in details, please keep watching. Hi, my name is Eric Lee. I'm a chartered accountant with more than 15 years of experience and property investment advisor and a buyer's agent. My approach to the property investment is not just buying properties, but setting up strong foundations like a legal structure and tax matters, and of course buying high-performing properties. So, if you want trustworthy property investment information, please hit the subscribe button and stay tuned. Today, I will be covering what is SMSF and pros and cons about SMSF, and who would benefit from using SMSF. Lastly, practical steps to establish your SMSF. Let's get started. What is a SMSF? A self-managed super fund is basically your own private super fund. So you can control your own investments, unlike a traditional funds managed by financial institutions. With a SMSF, you directly choose where your super fund invested, which can include residential and commercial properties. Now, let's look at the advantages why it is getting more popular. First and the foremost, tax benefits. This is the biggest reason why people choose to use SMSF. There are three main tax benefits for SMSF. Firstly, income from SMSF investments is taxed at a concessional rate of 15%. And this is more likely lower than your individual marginal tax rate. Secondly, this is the big one. If you sell the asset in super after you retire, CGT is exempt. Yes, you heard it right. No CGT if you sell your investment during pension phase. In the past, there was no limit whatsoever on how much you can have in pension account and get your all assets CGT free. But since 2018 financial year, the government introduced the maximum amount you can transfer into your pension account, which is $1.9 million for 2025 financial year, and it will be $2 million from next year. Lastly, the assets sold during accumulation phase, which means before retirement, SMSF can get 1/3 capital gains discounts for assets held for more than 12 months. I know, it is less than 50% discount for individuals. But if you combine the lower tax rate of 15% and this discount, it is quite good actually. The second benefit is asset protection. Because SMSF is a separate legal entity which is totally separated from you as an individual, assets held within a SMSF is protected from creditors. Lastly, through SMSF, you may increase your borrowing capacity. Not your own borrowing capacity, but you can actually borrow money in super. As I mentioned earlier, SMSF is entirely separate from individuals, and so borrowing capacity as well. SMSF can borrow money under LRBA, stands for Limited Recourse Borrowing Arrangement. An assessment of borrowing capacity is done based on the fund's earnings, which is your contributions, not based on your personal earnings. So, even though you have already reached your maximum borrowing capacity, you may still be able to borrow in SMSF to buy a property as long as your funds can service the loan. But like everything else, there are some drawbacks as well. The first one is the cost. The cost of setting up SMSF isn't cheap. Especially for those who want to set up an SMSF for property investment, setting up cost is actually double, because of the rule that the property must be held by a bare trust if borrowing is involved. This is an important characteristic of limited recourse borrowing arrangement I briefly mentioned earlier. And also, there are maintenance costs like accountant fees, auditor's fee, because SMSF financials must be audited by an independent registered auditor every year, and potentially financial planner's fee if you use their services. The second drawback is that you will be exposed to the additional responsibilities, because superannuation is people's retirement fund, which is their future for many Aussies. The government is really strict on this matter, ensuring the fund is managed safely. For this, there are a lot of regulations you must follow, and you have to ensure the fund is compliant with all relevant super and tax laws. Are you still interested in using SMSF? Then let's check if SMSF is suitable for you. Although there is no legal minimum balance you need to set up an SMSF, typically speaking, you need about $200,000 or $250,000 super balance due to the setup cost and ongoing costs. Especially if you're planning to buy a property, you need enough balance to pay initial costs like a deposit, stamp duty, etc. But the balance I'm referring to is not only your personal balance, but combined balances of all members, commonly your spouse and other family members included. So, if you have enough balance and you want greater control and flexibility over your retirement investments, or you want to buy a property in super, how can you set it up? I strongly recommend you to engage a qualified professional like financial planners and accountants. I know that there are many websites that you can set up SMSF quite easily, and their fees are quite low compared to fees charged by actual professional firms. But you need to be super careful with those online services, as they often lack proper support and advice. So don't get yourself trapped by their low fees, because it's all about low quality services. The first actual step to set up an SMSF is to review your financial situation, preferably with the help of professionals. This is more than just checking your super balance, but including reviewing your financial situation and goals and what you want to achieve in what time frame and cost involved, so that you know if SMSF is right for you. The second step is a legal setup of SMSF. SMSF is a type of trust, so you need to decide who will be trustees of the SMSF. For SMSF, all members must be either trustees of the SMSF or directors of the trustee company. In addition, if you want to invest in property with borrowing from the banks or other financial institutions, you have to set up a bare trust as well. When set up, I recommend my clients to set up corporate trustees for SMSF, as well as a bare trust for simple administration, succession planning methods, and some other benefits as well. Also, if you are a single member of SMSF, you cannot set up SMSF with yourself as an individual trustee, but you can do so with a corporate trustee. Remember, getting professional advice is crucial. Errors in setup or compliance can have costly implications. In summary, SMSFs can be highly effective tools for property investment and also other types of investments when understood and used correctly. However, they are not suitable for everyone. Always seek professional guidance tailored to your circumstances. If you found this video useful, please hit the subscribe button for more practical insights like this video, and feel free to reach out directly with any specific questions using the contact information below. Thank you for watching, and I will see you in the next video. Bye for now.